Good day, ladies and gentlemen. Let me take this opportunity to record another video once again. And this video is based on this question, which is RATA PTY LTD. And I will be highlighting as usual and explaining only the calculations. I don't normally focus on theory because I know that students can go and read and understand the theory, but the complex part in cost and management accounting is normally the calculations. So I will be going too much in details, calculating and explaining every bit and piece of the calculation. Then after we see how far do we go from there. This was the question paper for the year 2018, if I still remember, semester 1 June exam. This was extracted from there. Now, before I read the information provided, I always recommend that we should always read what is required so that we are aware of what we are required to do before we read the information that relates to what is required. So our requirement goes as follows. We are required to calculate the following variances, and they are for the rooibos ginger loose tea for the month of June 2018. We need to know or to calculate the sales price variance, the material mix variance, and the material yield variance. And the material mix variance and the yield variance are quite challenging variants to mention though, but I'll unpack them today so that after this question you are very clear in terms of how to calculate the mix and the yield. Briefly discuss the two reasons for the possible adverse of the material yield variance. Theory, normally I don't focus on that, but I will upload definitely the memorandum, or you can inquire of the memorandum, then you just go and you read that. It says in number C, we must advise RT management if they should insource the production of the dried rooibos leaves or should continue purchasing the dried rooibos leaves from the external supplier. The calculations should be for a 3-year period. Ignore the time value of money implication. So this will be another huge mark calculation, 18 marks. Then after, we have to advise this management if should they produce these dried rooibos leaves or should they continue purchasing them from their external suppliers. Again, in number D, we are to identify and briefly discuss the 4 quantitative factors that RT should consider when making decision to insource the production of the dried rooibos leaves. So this is a very popular question where we focus on the non-financial factors, meaning the quantitative factors. Sometimes they can say non-financial factors. Then number E, we are then required to identify if RT is a price setting or a price taker, number 2, and it continues again theory in number E, which you can read that one. Very, very straightforward to understand what is price taking and what is price setting. Then number F, we are required in number F to calculate the target selling price per package for the rooibos espresso capsules using the target rate of return on investment capital approach. That is where we're calculating the target price. Very easy again to calculate that one. The financial manager has heard that some loose tea producers are using process costing. She is refreshing her process costing knowledge and has asked you to explain the circumstance in which the shortcut method can be used in drafting a quantitative statement. This is a very, very straightforward theory question. And in this one, we will say that they can use a shortcut method only if all the output units or all the units in the output column past the point of spoilage or inspection during the current year. If that is the case, therefore they can use the shortcut method. But I'll also try to unpack that one as we go with the questions. So at the back of our mind, we know that some sales variants are required, material mix variants required, yield variants required. We also know that we need to consider if the company should insource or outsource this product that they are producing, which is the dry leaves that they are buying currently from the supplier. Now it says RATA PTY LTD owns 1,000 hectare farm situated in Cedarburg region of the Western Cape. Take note of the fact that they are owning a 1,000 hectare farm. They are not renting it or they are not leasing it. They are owning this 1,000 hectare farm. So they have the ownership of this 1,000 hectare farm. Very important, because definitely the fact that they are owning, when it comes to decide to produce these leaves, it will definitely have effect on the fact that they are owning that 1,000 hectare farm. The farm is situated in an unspoiled mountain wilderness area with an abundance of wildlife and plants. RT uses a portion of the farm. Take note, RT is using portion of the farm. That means if they are using portion of the farm, that means they are not using the entire 1,000 hectare farm. Definitely the one that they are using, maybe they are renting it out and they are generating income on the other part of the farm that they are not using. So they are using part of the farm and another part is not used by them. Definitely they are leasing that part out. And they are using, or they uses part of the farm for its tea production plant and farm worker housing, meaning there are farm workers who are working in this farm and they have houses in this farm so that they are close to the production of this tea. RT is owned and operated by farm worker families living in the farm. So this part of this farm is because there are farms who are having houses there and they are living there. Currently, RT purchases all their raw materials from a number of external suppliers. So now they buy all their material from different suppliers. That means they are not producing these dry leaves by themselves, but they buy them from external suppliers. Then it further says this direct raw material, which is dried rooibos leaves and other herbs, are combined to produce different types of tea products. So now this company is producing different types of tea, but they are mixing dried rooibos leaves and other herbs to make these different types of tea that they are doing. Now it further says that RT's financial year end is 30th of June and it operates for all the 12th month of the year. RT uses a direct costing system and values inventory on the first in, first out basis, and the target rate of return is 10%. In one of the questions, we're required to calculate the target price considering the rate of return on the investment. So this 10% will have to use when we are calculating the target price. Obviously, we will be given the amount that has been invested, so that the target return on the investment will be 10% of the amount that has been invested. So now let us read further, and now we are going to number 1. And number 1 now is the rooibos ginger tea, meaning one of the teas or products that RT is producing. It says RT is the only company that produces and sells rooibos ginger loose tea made from a blend of 2 direct materials. Is made from a blend, meaning a mixture. The minute there is a mixture or a blend, that means a mixed variance will be required. And these 2 material that they are mixing, or this blend of material, it is dried organic rooibos leaves and dried organic ginger. So they mix these 2 to make the rooibos ginger loose tea. So now there are 2 material that we mix to make this tea. Now it further says that the rooibos ginger loose tea is one of the RT's best selling product, and there were no budgeted direct raw materials opening and closing inventory for the 2018 financial year, so there's no opening and either closing material at the end of the year. The rooibos ginger loose tea are packed in box containing 100 grams of the rooibos ginger loose tea mixture. Obviously, they have mixed two material, hence they call it a mixture. So now they say they pack them in boxes containing 100 grams, meaning a product is made of 100 grams. And I want to bring your attention into the conversion of the grams into kilograms. Meaning if we have 100 grams, which is 100 grams, we can divide this by 1000 grams in a kilogram. This will give us 0.1 kgs. That means 100 grams is the same as 0.1 kgs. So they could have said 0.1 kgs, but they opted to say each box is packed in 100 grams or 0.1 kgs. And this is quite important to note that this 100 grams is a mixture of the two ingredients, meaning it is the mixture of the dried rooibos leaves and also a mixture of the dried organic ginger. Those are the two mixed materials or leaves that make up this total of 100 grams packed in a box. I want to highlight that because it is quite important. You'll see that as we progress. The following details relating to the rooibos ginger loose tea have been extracted from the budgeted working papers for the financial year ended 30th of June 2018. So this is our budgeted information for the year that ended 30 June. It says RT's estimated that it will produce 72,000 boxes or 72,000 products of rooibos ginger loose tea, and they expect to sell 70,800 boxes of rooibos ginger loose tea evenly throughout the financial year. This word is quite important because evenly it means equal, and equal it means we can divide their expected sales by 12. That means their sales are constant, meaning there is a constant demand. They will be selling almost the same number of units every month, which in total of 12 months will amount to 70,800 units. But it's not much important so far, but to other dimension it might be important. Then take note of the fact that they expect to produce 72,000 boxes, meaning 72,000 units. The standard sales price is 40 Rand per box of rooibos ginger loose tea. So they expect to sell each of these boxes at 40 Rand. Remember, we are required also to calculate the sales price variance. So we need to know how much the actual selling price, and we say selling price vice versa the budgeted selling price, so that we get to know if is our sales price variance favorable or unfavorable. So now we go further, and it further say that direct raw materials required to produce the budgeted 72,000 boxes. So now this is the material that we need to have in order for us to produce the 72,000 that we expect to produce. Now it says, remember, we are producing our product using two materials, which is material 1 and material 2, if I may say so. Material 1 is the dried rooibos leaves, which we budget to buy it at 30 Rand. Then after, the total of the material will be 172,800. But we don't know how many kgs we are going to buy, but we know that the price per kg, multiply this by the number of kgs. Let me highlight that. The price per kg, multiply this by the number of kgs. the number of kgs, it will give us the total price to buy those kgs. Now that means we need to know how many kgs we need to buy in order for us to be able to manufacture the 72,000 boxes that we want to manufacture. So now if we set the price multiply by the unknown, or multiply by the unknown, which is the kgs, and it gave us this. Therefore now we need to calculate this unknown in reverse. How do we do that? We say 172,800 divide this by 30 rand, and if we divide this by 30 rand, it will give us the number of kgs of dried rooibos leaves that are required in order for us to produce the 72,000 boxes, which is 100 grams per unit. So now let us do that calculation. 172,800 divide this by the price of 30 rand, it will give us 5,760. 5,760, and I want to highlight the fact that this is in kgs, not in grams. Why in kgs? Because the budgeted price that is given to us, it is per kg. But don't be ignorant also, or let me say be mindful of the fact that our box is 100 grams per box, of which that 100 gram per box is 0.1 kgs. So I want to bring your attention to that because that is very important. Now we have 5,760 kgs of dried rooibos leaves that are needed in order for us to be able to manufacture the 72,000 boxes that we want to. Now let's go to the second material, which is the dried ginger. Dried ginger, we expect to buy it at 200 per kg, meaning not per gram. Then now we have to say, we set multiply by the kgs, then this will give us the total cost of 288,000. Now we want to do a reversal. Remember, if you reverse, you want to calculate the unknown, and previously you multiplied. Mathematically, it says we must divide. So now we divide again by 200 in this case, because the price was 200. Now if the price was 200, mathematically R will cancel R. So the answer that we get will not be in rands, but it will be in kgs. So now that means for this dried ginger, we will have to say a total of 288,000. Divide this by 200. That means it will be 1,440 kgs. 1,440 kgs. Let me use this note so that I can highlight everything very clearly. We have two types of materials that we have. We have dried rooibos leaves, and our dried rooibos leaves, we said that we are looking for the number of kgs. Number of kgs will be equal to, or let me just write it as it is. It was 30 rand, multiply this by kgs, which we don't know, and this gave us 172,800, and we are looking for the number of kgs. So what do we do mathematically? I'm just explaining the same thing that we did previously. We divide by 30 rand. 30 rand will cancel 30 rand, and we divide by 30 rand. R will cancel R, so we say the required kgs will be 5,760 kgs. So this is where this calculation is coming from mathematically. The second one, we said it is the dried ginger. And the dried ginger, we said we buy it at 200. And we would have said 200 multiplied by the required kgs will give us the 288,000 rands, which is the total price, 288,000 rands. Then we say divide by 200. Why do we divide by 200? Because we are looking for the kgs. So whatever you do on the left hand side, you also do it on the right hand side. So now the required kgs will be 1,400 or 1440 kgs. Let me just confirm if it is 1440 kgs. 1440 kgs. I just wrote many zeros. 1440 kgs. So now this is how this is calculated. Now we need not to be ignorant of the fact that we can convert these kgs into grams, because our product are in grams, but we can also work with the kgs. So we can say we might multiply this by 1000, and if we multiply this by 1000, that means we'll have to say now 5760 multiply this by 1000. That means it will be 5,760,000 grams, meaning this will be 5,760,000 grams, 760,000 grams. So these are grams, not kgs. And again, multiply this by 1000 in order for us to convert kgs into grams. This will give us 1,440,000 grams. So now these are grams. Now that we have kgs and grams, we then need now to go to another dimension. Remember, we now have calculated two things, and the two things that we have calculated is the kgs and the grams so far. Then let me go to my official calculations now. We need to know, first of all, how many kgs of the dried rooibos leaves are needed to complete 1 unit, and how many kgs of the dried ginger are needed to complete 1 unit. But we know that in terms of kgs, it is 0.1 kg, and this 0.1 kg is divided into rooibos and divided into dried ginger leaves. So now at the same time, this 100 grams is divided into dried rooibos leaves and again into dried ginger. So we need to know how much is the portion that is included in this 100 gram, how much the portion of that belongs to the dried rooibos, and how much the portion of this belongs to the ginger or dried ginger. So that is where I am heading now. So now let me go to that direction. We are now given two things: dried rooibos. We are given dried rooibos. I want to calculate the required per unit. We have dried rooibos leaves, which is 5,760 kgs, and at the same time we have dried ginger, and the dried ginger is 1,440 kgs, and the total of this will give us 7,200 kgs. So now, if this is the case, then we need to know now how many kgs then are required in the scenario and grams required in the scenario. Then let us say first of all how much portion belongs to the dried rooibos and how much portion or percentage will be the dried ginger. Now if we say first of all 5,760 divided by 7,200, that will tell us that 80% will be dried rooibos leaves, and obviously 20% of our mixture will go straight to our dried ginger. So now that means our blend will be 80:20 in terms of the percentage. But now we need to calculate our required per unit. Then our required per unit, which is dried rooibos leaves, we have to say we have a total of 5,760 divided by the number of units that we want to manufacture. This will tell us how many kgs are required to complete 1 unit, kgs of the dried rooibos leaves. 5,760, we divide this by 72,000 units. If we do so, this will give us 0.08 kgs. And I want to highlight the fact that these are kgs. Don't forget that. So whatever output that we get it in kgs. So now that means we need 0.08 kgs of the dried rooibos leaf as a mixture to complete our 100 gram of a box. And at the same time, I want to do this in all angles. At the same time, remember we have converted this into grams. And when we converted, we said it will give us 5,760,000. If you remember, when we said 5,760, multiply this by 1,000. It was 5,760,000. 5,760,000. This is in grams. So now if we use grams, we can still divide with the number of units, which is 72,000 units. But when we divide by 72,000 units, this will give us the required grams. Now, not the required kgs. Take note, these are the required kgs of the dried rooibos leaf to complete 1 unit. Now, this same kgs will be the same in grams. Meaning, if we say this divide by a total of 72,000 units that we want to manufacture, this will tell us that 80 grams are required. So now 80 grams is the same as 0.08 kgs. How is that the case? Because 80 grams divided by 1,000, it will give us 0.08 kgs. So either way you do it, you must get to the same numbers. And I'm doing this because in the exam you might be given figures in different dimensions, but still be able to analyze the given information and calculate accordingly. So now we have first dealt with the calculation of the required per unit in terms of our dried rooibos leaves. Now we need to know how much is the dried ginger required per kg and also per gram. So now we go to our dried ginger and we say our dried ginger we need 1,440 kgs. Take note of that. And how many units do we want to manufacture? We want to manufacture 72,000 units. So now we need to know how much is required to complete 1 unit. If the total kgs is this and the total units that we want to manufacture is 72,000 units. Now whatever answer that we get, it will be in kgs because we said kgs divide by the number of the units that you want to manufacture. So also be mindful of that, please. I want to hammer it and you understand. And this will give us 0.02 kgs. Let me show you the calculation. We have a total of 1,440. Divide this by 72,000, the number of units we want to manufacture. It gave us 0.02 kgs. So now we say we are not looking for kgs. We want things to be very simple, to be in grams, because our products are in a box of 100 grams. Don't forget that our products are in a box of 100 grams. Let us go there. Our products are in a box of 100 grams. So now everything at the end of the day must add up to that 100 grams. Now let us go there. Then we say, okay, we have 0.02 kgs. But let us calculate this in grams. That means we need to convert that 1,440 kgs, which is 1,440,000 grams. Divide this by the number of units that we budgeted to manufacture. That means if we do so, it will give us 20 grams. That means if this is 20 grams, let me check, 1,440,000. Divide this by 72,000 units. It gave us 20 grams. And 20 grams, divide this by 1,000. Don't forget, divide this by 1,000. It gave us how much? 0.02 kgs, which is the same as calculated above. So now either way you get information, please be able to analyze, unpack it, and understand and apply it in the case provided. So now remember, one product or a box of our tea bags is 100 grams. We sell our products in grams, 100 grams, and 100 grams is made of dried rooibos ginger leaves and also made of dried ginger, that 100 gram. And that 100 gram is made of the 80 grams that we calculated previously. The 80 gram that we calculated as 80 gram, that 80 gram, and we converted it into kgs. So now we had this 80 gram and 80 gram plus the 20 gram that we calculated to 20 gram plus 20 gram. This will give us the same 100 gram that they told us as the total of the box that contain 100 gram. So you see that your stuff must always balance or tie up together. Now we have unpacked this very clearly, and it's important to be mindful of that. Now let me again highlight this again as last explanation, meaning under this 100 gram they could have said 0.1 kgs. I want to note that they could have said 0.1 kgs, but they decided to say 100 grams. It doesn't matter. At the end of the day, it leads us to the same information. Now I've done analyzing this part. Let me then now analyze 1.2. 1.2 says that the actual, take note, the actual, previously it was budgeted working paper, meaning now we are under the actual information. The actual information for the month of June 2018 relating to the rooibos ginger loose tea, 6,100 units were sold for a total sales value of 256,200. So we sold at a total price, and 6,100 units were sold. So now we need to know how much was the selling price for the units that were sold. So now let us go there and we calculate the number of or the selling price. We have 256,200 where 6.1 units were sold. That means we actually sold our units at 42 rand, but we budgeted to sell them at 40 rand. If you still remember, our budget was 40 rand, but we actually sold them at a price of 42 rand. So now that tells us that just once again 6,100, we sold them at 42 rand. 42 rand vice versa, the 40 rand. Obviously our sales required price variance will be favorable. Then we multiply this by the number of units that were sold. So we can see that the sales price variance is already taken into account. Then it further says 6,500 boxes were produced. So we produced way below than we expected or than we budgeted or anticipated. So now if this is the case, that means that tells us that our units we produce way below than what we anticipated. Another variance can also be taken into account there. The direct raw materials were purchased and issued to produce or to production as follows. Now we purchased dried rooibos leaves, our first material, and we purchased 600 kgs at 21,000. So we need to know 21,000 divided by 600 kgs, how much is the price of the material that we bought for, because we targeted 30 rand previously. Our budgeted material price was 30 rand. Now we need to see if did we buy it at the price that we expected. So 21,000 was the total purchase price, divided by the kgs that were bought. This tells us that 35 rand was the selling price of the dried rooibos leaves, and we can see that the material price variance for the dried rooibos leaves will be unfavorable because the actual selling price was more than the budgeted selling price. So now that will be another variance that one will need to take into consideration, meaning it will be standard price of 30 rand minus actual price of 35 rand, and you multiply this by the actual quantity purchased, and our actual quantity that were bought will be 600 quantities. So this will be the variance for the material price regarding the dried rooibos leaf. The second one is dried ginger, where we bought 150 kgs for 30,000 rands in total, meaning now we have to say 30,000 rands divided by 150 kgs that we bought. That means our price still remain the same as we budgeted. 200 actual price is the same as 200 price that we budgeted to buy our dried ginger. So now this will be again the material price variance if it was required, but please do have that at the back of your mind because in other questions or other exams it might be there. So now we can see that with regard to the material that was used or issued, we used 585 and we used 97.50. 585 was used for dried leaves and 97.50 was used for the dried ginger. We need to a little bit unpack this. Remember, I said in my previous calculation, which I've deleted now, I said that when we come to our mix, this should be, we should mix 80% here and we should mix 20% here. Where was that coming from? It was coming from that 5,760 kgs and 1,440 kgs, which the total was 7,200. And we said from the budgeted information, it means this is 80% that must be mixed and this is 20% that must be mixed. By saying 5,760 divide by 7.2 and this divide by 7.2, and we discover that when we mix our rooibos loose tea, we must have 80% mix of the dried rooibos leaves and 20% mix of the dried ginger, so that our tea or our tea bag can have the taste that we want it to have. So now if it was supposed to be 80%, let us test if did we really mix 80% is to 20% or not. Now our total here is 585 plus 97.5, and the 585 plus 97.5 gives us 682.50 kgs. Now we say multiply this by 80% because 80% of this we know that is supposed to be, and we can say that it is not what it was supposed to be. 80% was supposed to be 546. So that means how they mixed actually is not the same as how they're supposed to have mixed. So that means now that we are already tapping or doing our mix variance. And we say again 682.5 multiply this time by 20%, it gives us 136.5, and we can see that the mix variance is not how it's supposed to be. Here they mix more than what they're supposed to be, and here they mix less than what they're supposed to have mixed. So now this is our mix variance. Take note of the fact that this is 80% coming from the budgeted information, and this is the 20% that was supposed to be mixed. So now we have to compare the standard mix. We call it the standard mix because that is normal my language for variance. This is what we call standard mix, and this is standard mix. We compare that with the actual mix. That is how you deal with the variance in terms of the mix variance. You focus on the actual material that was mixed, vice versa with the material that was supposed to be mixed, and you are already done with your mix variance. Meaning our mix variance will be 546 minus 585. We multiply this by the price of 30 rand. Second one will be 136.5 minus 97.5, and you multiply this by 200, and we already got our material mix variance. Now I will still go there. I'm still analyzing now and unpacking the questions for you for simplicity of understanding. Now let us go to the next information and see what we can read from. It says insourcing. Now the minute now there's number 2 and the heading says insourcing, is a different question. So now let us deal with the variance first, where we ended, and we deal with the variance. Then after we come to the question of insourcing. Now let us go and reread the variance that were required. The variance that were required were the sales price variance, material mix variance, and material yield variance. So that's where we will stop. Now let us go to our material yield variance. First of all, analyze that part. When you come to material yield, we are focusing on the actual units that were sold, were produced. Then after we say actual units that were produced, how much portion of that was supposed to be allocated to a specific material, meaning how much of that was supposed to be allocated to the dried rooibos leaves, and how much of that was supposed to be allocated to the dried ginger. How do we do that? We say out of the 6,500 units that were manufactured, we know that the dried rooibos it should be 0.08 kgs, and the dried ginger are supposed to be 0.02 kgs. So now we say out of the actual production, how much standard was supposed to be allocated in terms of each material. So now we know that in terms of our material mix, it's supposed to be 0.08, and another one is supposed to be 0.02. So now let us go and we do now the actual calculations of our variance that we have already analyzed. Now let's go and we answer the questions that were required. We start first of all with the sales price variance. We start with the sales price variance. Our sales price, remember, we have only one product. We don't have two products. It will be standard price minus actual price times by actual sales. Times by actual sales. I normally use abbreviation on standard costing. Our standard price or budgeted price was 40 rand and actual price was 42 rand. Times by actual sales, we actually sold 6,100 units, and this will give us 2 times by 6,100, 2 times by 6,100, it will be 12,200. 12,200. The variance is favorable. The sign of writing it negative is not much important. You can start with the actual minus the standard so that you get your answer as positive. So we go to the second one, and the second one now will be the variance of a material, which is material mix variance. This was number 1. Then we go to the second variance. The second variance is material mix variance. Material mix variance. Our material mix, take note of the fact that we have two material. Our two materials, we have dried rooibos leaves, and the second one, it is dried ginger. Now we have to say our standard information and our actual information, which we have already calculated to be 546 and 136.5. Vice versa, the actual, which is 585 minus 97.5. And we multiply this by the standard price, multiply this by the standard price of 200 and standard price of 30 rand. This will give us the two variants. Let us see how much are these variants. We have 30, or we have 546 minus 585 equals, multiply this by 30, 1,170, adverse or unfavorable. Second one, we have 136.5 minus 97.5. This will give us 39. Multiply this by 200. By 200, it gives us 7,800. That is favorable. So this is how the two variants work. And please be also mindful of the fact that when it comes to this variance, first of all, you need to know how much is the percentage mixture. How much is the percentage mixture? The 80% and the 20%, make sure that you derive it from the budgeted information, where we said that we needed on budget 5,760 and we needed 1,440. So you first need to calculate the percentage from here, and after you have calculated the percentage, you say now how much material was actually issued. We said that this will be 80%, just reminder, in 20%, which is 5,760 divided by this and this divided by this. The minute you get your percentage allocation of the ingredients or of the material, then you go to your actual material that was used or issued, which is this material that was issued. Then you say if they used a total of this material, in total all of them, how much portion of that, or how much is 80% of that, and we get 546, and how much is 20% of that, and we get that 136. And this is what we call standard mix. This is what we call standard mix. Then you say standard mix, vice versa, or minus actual mix. Then you multiply this by the price. So this is how the material mix variance is calculated. Now we go to the second variance, which is the material yield variance. We go to the material yield variance. Now our material yield variance, I said that it is based on the actual production. Then we go to the material yield variance, and the material yield variance is based on actual production. Now our actual production, we know that we manufactured in total a total of 6,500 units, and we say out of this is what was yield. Take note, we used this material in the portion given to us. We used this material, meaning we have used 585 kgs and 97.50 kgs, which in total was 682.5 kgs. This is what was mixed, and what we mixed yield a total of 6,500 boxes or products. So now we mixed, take note, this is the material that was mixed, and it was mixed in the portion of dried rooibos and in the portion of the ginger. This is what we mixed, and after we mixed these two materials, they yield, or they gave us the results of 6.5 products. So now hence our yield is connected with the actual production. After you have mixed the material, how much or what have you yielded with what you have mixed? So in this case, Hence I'm saying now our yield variance is based on actual production. So now we say if we produced the 6,500 units, how much was supposed to be total material for the dried rooibos? And if we produced the 6,500 units, how much was supposed to be the material for the dried ginger? How do we know that? First of all, we will know that by saying we definitely are aware of how many kgs are required to complete one unit. We know that the dried rooibos leaves we need 0.8 kgs, and the dried ginger we need 0.02 kgs. So we are very aware of that. That means out of what we have yield, we need to apportion it according to our standard required per kg for each type of the material. So now hence now we have to come and say, now when we speak of our yield, we need to say portion of this goes somewhere, portion of this goes somewhere, meaning we need to multiply this by 0.08 kgs so that we are able to extract how many kgs of material rooibos leaves was supposed to be there, and we multiply this also by 0.02, and this will give us a total of 130 kgs. So now we have 520, not in rands, kgs, 130 kgs. So this is the standard yield, if I may say so, and this is the standard yield. So we say this is what was supposed to have been standard, but it's not how it was supposed to be. Then after now we are dealing with the material yield variance. So now we say our standard for both products, don't forget, for both materials, dried rooibos leaves, and dried ginger, we say now our standard, we have our standard, and our standard, it is a total of 1 or 520 and a total of 130. And we say in actual fact we vice versa that with 546, which is the one we calculated in the mix, which was supposed to be, and 136.5. We compare that from the actual units produced, which is 6.5. Then we multiply this again with the price of 30 rand and with the price of 200. And this will give us the two variants. And our two variants, we have 520 minus 546. Multiply this by 30 rand. It gives us 780. And that variance is unfavorable or adverse. The next one we have 130 minus 136.5 equals, multiply this by 200. We have a total of 1,300 variance, that is also unfavorable. Now we have completed the two variants. Then we continue now with the same question, and we are going now to the second part of this question, which is the insourcing part of this question. Now insourcing, it says as let me first check if we have completed all that we were required to do in terms of the variance. In terms of the variance, yes, we completed the three variants, and this is just the brief theory on what are the possible, or discuss the possible reasons for the adverse variance. And its theory, it could be machine or human error that led to that, or it could be because of the insufficiency in production process that will result in the rooibos leaf ginger used. It could be maybe our employees are not skilled, or they are unskilled, or there's insufficient workers, or we don't have enough employees. So that those are the possible reasons. It's either it's machine or human error. People that are in the production department, they've made mistakes, or it could be they are not skilled enough. So there's insufficient production process that results into the material used more or less. So yeah, that's simply theory questions. Now we come to the second part of this question on number C, the major 18 marks of this question, which says ignore the value of money implication. So we must not take into account the term value of money. Advise RT management if they should insource the production of the dried rooibos leaves, or should continue purchasing the dried rooibos leaves from external suppliers. The calculation should be in 3-year period. So now we are focusing on this calculation for a 3-year period, meaning now we have to go to the insourcing decision. If should they insource, or should they purchase from the external, or should they produce by themselves? Should they produce, or should they buy from external suppliers? And there's a whole lot of information that needs to be analyzed with regards to this. So now I'll be going to this in details, and I will be doing the calculations while I'm reading the information that is given to us, so that I don't have to come back again and read and go back and do the calculations. So I'll be reading and doing the calculations at the same time. Now we need to have two headings always in this case, where we say we must purchase or we must produce. There are two options: either we purchase or we produce. So now these are the two headings that I will be recording our information. Whenever we want to purchase, there will be figures that need to be attached, and in the case where we need to produce, there will be figures that we need to attach. So the decision is either we buy from external suppliers or we produce by ourselves. Now let us go on that same tone. It says under the insourcing of dried rooibos leaves production that as part of their growth strategy and potential savings, RT is investing or is investigating the possibility of insourcing the dried rooibos leaves production. This investigation revealed the following information. Dried rooibos leaves production starts by planting seedlings that grow into rooibos bushes. The rooibos bushes, which is green rooibos, are harvested by hand once a year by cutting off the branches 30 centimeters above the ground. Rooibos bushes are harvested 3 times before new seedlings must be planted, meaning if they seed this year, in the next 2 years is harvested. Yet in the next 3 years they will be doing the harvest of the seeding that they've done. So seeding is done once, and 3 times we do the harvest. So it's not every year that we must incur the seeding, but only after 3 times of harvest have been done. The harvested green rooibos are cut into uniform lengths, fermented, and then dried in natural sunlight, which turns the green rooibos into dried rooibos leaves with a reddish color. In order to meet the demand of their products, RT estimates that it will be required to produce 40 tons of dried rooibos leaves per year, for a total of 120 tons over a period of 3 years. So now they need to produce 40 tons per year, which is 120, because 40 times by 3 will give you 120. Take note that these are tons. So now if we need to convert this into kgs, we multiply this by 1000, and by multiplying this by 1000, it will be 40 times by 1000, meaning they need to produce 40,000 tons or kgs every year which will be multiply that by 3, it will be 120,000 kgs over a period of 3 years. So that's what they need to produce. If RT continues to buy the dried rooibos leaves from external suppliers, it is estimated that the dried rooibos leaves purchase price will increase annually by 10% at the beginning of each and every year. Now, if they decide to continue to buy these rooibos from the external suppliers, the price will increase by 10% beginning of each and every year. So now we need to know how many kgs will they buy from their suppliers. Now, and they further told us that year one's annual increase of 10% will be based on the actual 2018 June purchase price. Remember, previously our dried rooibos price was 30 rand. Remember, we are focusing on the dried rooibos loose or leaves, meaning we are not producing the dried ginger. No, our focus is on the dried rooibos leaf that we want to produce, of which the price of that for 2018 was 30 rand. So now this will be 30 rand as the base price, and you say from this price we expect a 10% increase. Times this by 1.1, meaning it will be 30 rand, multiply this by 1.1, and this will give us a price of 34 rand 10 cents. We multiply this by the kgs, then we move forward. In this case, we have 40,000 kgs for year one. The 40,000 kgs for year one. Okay, let me just check that one, because our kgs are, we have our tons 40, which will change year by year. So we are told that we have 40 tons in year one. Okay, then if that is year one, we need to multiply it by 10% for year one, 10% for year two, and 10% for year three. So now let us do that calculation again. We have 30 rand that, oh, let me confirm something. Okay, year one annual price will increase based on the actual, okay, not based on the budget, based on the actual. And our actual price of material was 35 rand. The budget was 30 rand. This is the budgeted price. The actual price was calculated here as 35 rand. Let me just verify. This is very important. It's a trick question. 21,000 divided by 600. The actual price was 35 rand. Yes, that is correct now. So now that we have the price of 35 rand, then we need to say from that 35 rand, we increase it by 10% times by 1.1, and we multiply this by 40,000 kgs. This will be price for year one. So let us do our calculations or our workings. Now, if they purchase, meaning we are focusing now on the purchase price. If they purchase the material, we have year one, year two, and year three. Year one, we have seen that it will be 1,540,000. 1,540,000. Multiply this by 1.1. It will be 1,694,000. Multiply this by 1.1. It is 1,863,400 plus 1,694,000 plus 1,540,000, which gives us 5,097,400 if we decide to buy and continue buying the material. Now here 5,097,400. If we buy the material, this is the price that we will be incurring over the period of 3 years. purchase price will be this amount. Then we go to the second info that is provided to us. Second info is telling us that 2.4 Cedar Conservation LTD, which is a CC, a company that conserves the environment and provides tourist accommodation and activities, currently leases 95% of the 1,000 hectare farm from RT, while RT is utilizing the remaining 5%, or currently they are using only 5%. The lease contract with CC will expire in 4 years, and the monthly rental, take note, the monthly rental rate is fixed at 250 per hectare, not per kg, per hectare, for the period of the contract, to have enough farmland available to produce, or to have enough farmland available to produce the required 40 tons of dried rooibos leaves per year. If the insourcing strategy is accepted, RT's farm utilization will have to increase to 15%. They are currently using only 5%. So if they want to produce, they need to increase this by 15%. And the area CC will therefore reduce to 85%. So meaning this conservation will use only 85% of the 1,000 hectares. CC is unaware of the proposed reduction in the hectares available to it for rent. So now if they buy, they are using 5%. If they produce, they will use 15%, meaning they will only get the rent out of the 85% of the 1,000 hectare that they are owning, because this company that is renting or leasing will have to only utilize 85% of that, and we use 15% of that. Therefore, we'll be getting rent out of 850 hectares. So now let us go and do the calculation of that. Remember, we are now deciding either we purchase or we produce. There are two options now. We have our rental income. We have our rental income. If we purchase, what happens? If we purchase, we know that we have 1,000 hectares, of which 95% will be used by this company that is leasing, and we multiply this by 250 per hectare, and it's per month, and we multiply it by 36 months. So now that means out of this 1,000 hectare that we have, we multiply it by 95, and this company will be leasing 950 out of this farm. This 950 is 950 hectares. We multiply it by 250 per hectare, and it's every month, then multiplied by 36 months, which is 3 years, meaning it will be 855,000. This is income. Rental 855,000. Rental income 855,000. Take note that this must be negative because expenses were recorded as positive under purchase. So now this will be negative 855,000. Then we now have to say, when we produce, remember our rent will be affected. If we purchase, this is the rent that we'll receive. If we produce, our rent will have to go down, meaning we will no longer receive rent from the entire 1,000, but only 85% of that, of which the rent is 250, and we will be getting this for 36 months again. Therefore, now if we produce, we go under the column of produce. If we produce, this is what we will be expected to receive. It will be 250, multiply this by 850 hectares, and we multiply this by the number of months, which is 36 months. We get 7,650,000 rands over a period of 3 years. Then now we go to the next info that is given to us. Next info is telling us that 2.5, if the insourcing strategy is accepted, RT will receive a once-off government grant of 1,100,000 rands. So there is government grant that they will be getting. So let us record the government grant. And the government grant is an amount of 1,100,000 rands. Why will they get this government grant? What are they going to use it for? Government grant of 1.1 million during year 1 to purchase farm equipment. RT will purchase this farm equipment to the value of 1.2 million in the same month the grant is received. So they will have to buy equipment now with the amount of the grant plus the 100,000 that they must take out of their own reserves. 1,200,000 rands is the cost of this equipment. So we have recorded that very correctly. 2.6, RT obtained the following information from similar farm with regards to the production of 40 tons of dried rooibos leaves. Remember, they are only producing or proposing to produce 40 only the dried rooibos leaves, not the ginger, per year over a period of 3 years, year 1 up to year 3. So this is what they will need. It's already been mentioned above. Seeding will be planted at the beginning of year 1 to a once-off total cost of 600,000. So now there is an amount of seeding that we need to take into consideration. So now we have to say our heading will be seeding. Remember, seeding is done, then after they will harvest for the next 3 years. Seeding is 600,000 rands once off. Then for the next 3 harvests, they will be using the same seeding that they used. Then after it further says, the harvested green rooibos loses 4% of its weight during the cutting, fermentation, and drying process. So we want to produce, remember, 40,000 kgs, which over a period of 3 years, we said that will be 120,000 kgs. So now if this is what we want to produce, and they are telling us that during the harvest of this green rooibos, it loses weight. Remember, weight is connected to kgs because kgs is the weight of the dried rooibos leaves. So their weight is affecting the kgs and the grams that we box into our product. So now meaning this 120 is not 100%, it is 96%. So if it loses 4%, we are looking for the 100% out of the 96% in simple terms. So now that means we need to increase this, not necessarily increase, but consider the 4% loss during the harvest, the cutting, and the fermentation stage, and the drying process. So we say 120,000 kgs, multiply this by 100, divide this by 96. That means we need to harvest 125,000 kgs in simple terms, because our kgs are losing 4% weight during the cutting, fermentation, and the drying process. So now it means the 120,000 kgs, which is the 120,000 kgs is 96%. So we are looking for 100% in simple terms. Now I'm just using the accounting knowledge in this case. Now meaning we need to harvest 125,000 kgs, not 120,000 kgs. Because 120,000 kgs is 96% because it's losing 12%. For remember, the 120 is coming from there. It was 120 tons, and I multiply this by 1,000 to convert it into kgs to make it very simple. Kgs are easier to use. It says now variable manufacturing overheads incurred during the cutting and fermentation and drying process are 8 rand per kg of harvested green rooibos. it is expected that the variable manufacturing overheads rate per kg will remain the same throughout the 3-year period. So now we need to allocate our variable manufacturing overheads. We have our variable manufacturing overheads, which is 8 Rand per kg multiplied by the kgs that we want to manufacture, 125,000, no longer 120,000. Multiply this by 8. This will give us a total of R1,000,000 of the variable manufacturing overheads that will be incurred. Now we have allocated that. We go to the next part. The next part says, during the harvesting period, migrant workers are employed to assist with the manual harvesting. Migrant workers will be paid 30 Rand per hour. They are paid 30 Rand per hour, and they can harvest 10 kg of green rooibos in an hour. 10 kg of green rooibos in an hour that they are being paid. Remember, we want to produce 125,000 kgs. Divide by 10, it will give us how many kgs will they produce per hour, so that you multiply that by the rate they are being paid per hour. So now we say 125,000 kgs divide by 10, it will tell us that per hour they produce 12,500, and in that hour they are being paid 30 Rand. So this will be 37 or 375,000 rands that will be paid to these migrant workers. So now we record our direct labor. We have our direct labor, and our direct labor is for the migrant workers, and the migrant workers are paid 30 Rand. Multiply this by 125,000 after it has been divided by 10, and this will give us a total of the labor cost as 375,000 that will be paid to the migrant workers to produce the 125,000 kgs. 375,000 kgs. Then we go to the next part. Number 2.6.1, it says 4 new workers will be permanently employed from year 1. The total combined starting annual salary for these farm workers will be 240,000, and the expected salary increase will be 7.5%. Now we have to allocate the salaries for these workers. Remember, our heading still doesn't change, purchase, and here we produce. Remember, what do we purchase? We are purchasing the 120 ton, and here we are producing the same 120 ton, which is 120,000 kgs. Don't forget that. I prefer the kgs because kgs makes life very easy in costing. Now we go to the same calculation, direct labors, and our direct labors in this case, it is the farm workers that are permanently employed. It is the farm workers who are permanently employed. How are they getting paid? 240,000 combined annual salary in year 1. In year 2, it goes up by 7.5%, meaning now we have to say times this by 1.075. It will give us the amount for year 2. 240,000 times 1.075. It is 258,000. It gives us 258,000. Year 2, then we go to year 3. Multiply this by 1.075. 277,350. 277,350. Then now we add the 3 plus 258,000 plus 240,000. It is 775,350. 775,350. That will be salary for the permanently employed farm workers that will be employed for the next 3 years. Close to the end, fixed manufacturing overheads are estimated to be 270,000 per year. The cost will remain unchanged for the next 3 years period of the contract, and it will be negotiable with the suppliers. So our fixed cost, they are really fixed. It is fixed cost 270,000. It will be 270,000 for the next 3 years. 270,000 by 3, multiply this by 3, it gives us 810,000. That will be our fixed cost. Let us check if there is another cost that still needs to be taken into consideration. Fixed costs are accounted for. Dried rooibos leaves are exported internationally at an export cost of 5,000 per ton, and locally distributed costs to external clients are 1,000 per ton. Distribution costs are for the account of the rooibos producer. We are not distributing this. Even if we produce the rooibos leaves and we use it in the production of our rooibos tea, then after we sell it. So we are not distributing those rooibos leaves anywhere. So this one is not related to what we are doing. So now we can do the calculations of all the figures. When we buy and when we produce, what will happen? Just do the verification. This will give you negative 3,452,600, and this will be 3,989,650. Now the decision, must they produce the dried rooibos, or must they produce the dried rooibos leaves, or must they buy them? So the decision will be that RT should produce the dried rooibos leaves. The reason why they should do that is because they are making a profit. Because the company will generate higher net income savings because of the saving that they will have. So their savings will be because they will generate higher net savings, and their net savings will be an amount of 537.50, which is the difference between 3,452,600 minus 3,989,650. Take note, if they are producing it, they are getting higher savings, 3,989,000. But if they purchase, that will be 3,452,000. So now for that reason, they are making higher net savings, then they should consider producing this over the 3-year period under review. But write it completely. I was just doing it to make sure that I'm also saving time. It's straightforward to conclude because you can already see the figures. Take note of again the fact that if you want, you can keep the incomes positive and expenses negative. It becomes more simple. Incomes, you can keep them positive, expenses, all of them negative. This is not an expense. Keep expenses negative and incomes positive, so that whatever answer you get, then you know that, oh, if it's positive, it's savings. So either way you want, it doesn't matter. At the same time, negative is still the same thing. The minute is negative in your total here, that will be indicating that the incomes are less than the expenses, meaning you have more savings, in other words. So you can also take that, it's more simpler to be honest. Now we come to the next part of this question, which is the closing part, where it says rooibos espresso capsules. With the growth in the popularity of coffee capsules machines and the increase in the sales of the rooibos espresso capsules, RT is considering entering the rooibos espresso capsules market within the next 3 months. The expected investment to produce the capsules is 600,000. Remember, return on the investment is 10%. So we need the markup amount. RT expected cost per package containing 10 capsules will be 25 rand, and there is an expected annual demand of 400 kgs. So now we will be then required in this case to calculate our target price. This is the question of the target price. Very easy mark to grab. Target price will be markup. Our markup will be calculated from the amount that we expected that return on the investment. So now we say 600,000 is what we have invested, divided by the number of units that we expect to sell, which is the demand, meaning now we will get to the amount of 150, and our target return on the investment is 10%. Don't forget that. Target return on the investment is 10%. So we say that was 600,000 divided by 400, 600,000 divided by 400 or 4,000, 150, multiply this by the return on the investment, 15 rand. So our markup will be 15 rand. From the markup, we just add the cost that has been given to us. Cost that has been given to us is very straightforward. They've told us that the cost per unit, it is 25 rand. Cost per unit is 25 rand. Plus markup amount will give us 40 rand, meaning cost plus markup amount will give us the selling price. So this is the target selling price. Target selling price. Target selling price is an amount of 40 rand. So that is the response to the last part of the question. So now this is how you deal with this. Remember, again, the required return on the investment was given to us on top. Target return on the investment is 10%. So now when you say 10%, multiply that by the return on the investment, you get to the markup amount. Markup amount plus the cost price will give you the target price that they must charge. Now, again, theory, go and read on that. And this was the calculation of the target price. The format was here. Last part is this one where I said the company here should consider, or the company can use a shortcut method. Why? Is because all the units in the output column would have passed the point of inspection during the current period. Why am I saying that? Is because there is no closing inventory. So if there's no closing inventory, whatever inventory that they started with, it all went through up until the end of the production process. So guys, with that, let me say thank you very much. I hope you have understood something out of this question. Any questions, please highlight me, then I'll respond to you to give you more clarity. Don't forget to subscribe. Thank you.